So the only mortgage I've ever paid off was an adjustable mortgage. Adjustable rate mortgages can be a fantastic tool when used responsibly. Here's how I did it. I bought my first property in my late 20s. I was single, I didn't have a ton of income, and I was working in real estate, so my income varied a lot. I had a really great lender, and she recommended that I look at an interest-only, adjustable rate mortgage so that I could keep my payments as low as possible. It also gave me a benefit that as my business grew, I'd be able to pay the mortgage off faster and recalibrate my payments. So the loan I used was called a 5-1 ARM. My interest rate was fixed for 5 years, and then it could adjust once a year after that. It could never adjust more than 2%. Now, there are rules to how adjustable rate mortgages perform. In my case, my loan was on the LIBOR index, and it couldn't adjust more than 2%. So I had 5 years with my lower interest rate, and then year 6, it was going to adjust one time. Because I bought in 2005, we all know what happened to the market right after that. Prices went down, and eventually interest rates came down. So my adjustable rate mortgage actually went down instead of up. That's a story you don't hear people talking about today. So I went from a 7.25% interest rate, eventually down to a 2.75% interest rate. I continued to pay more than the mortgage payment each month until I was able to pay the property off. So if you're single or young and just trying to get a foot in the door, it might be worth looking at an adjustable rate mortgage. Here's who it's great for: folks who are financially responsible, live beneath their means, and don't have any other debt.